So I'm looking for the low 50s with bids, a delta that's not too horrible, a tick that's not too horrible for a long back up into high 50s, low 60s. And that's going to be our first trade long side, if it comes. Okay. I'm not looking for any shorts in the mid 60s. I'm looking for the mid 70s for short side. Mid 60s is just a target for me if I'm long low 50s. So this is just a target. I'm not looking to actually get short mid 60s. Even though it's a zone, it's just a target for me. It's too close. It's, you know, I need more spike. So as of now, I'm just waiting for low 50s or mid 70s, and then I'll go from there. If you come into low 50s and you get long, you have to see tick get back up into 0. If tick holds negative, you have to get out of the trade, because you don't want to see sellers active at support. That's not what you want to see. Okay, coming. So I'm watching for one more snap under 54, take out some stops, I'll go long back up into high 50s, low 60s. For things to happen first, I want to see stop outs. I'm looking for the big picture idea, not scalps. I don't really care about scalps. But again, you can trade the zones according to your own personality. This is just my plan and what I'm going to do. Let's see. Nicey breath is almost it's pretty much neutral. Nasdaq is negative 2 to 1. It's nothing crazy. It's actually a bit strong considering. Advent decline is at the high of day. So with the AD over the high of day and the ES in the center of its first range, I'd be careful on shorts if you're shorting for whatever reason anywhere in here. Considering that we just got that news and the reaction was an initial dump and now it's holding, that's something that shorts did not want to see. Okay, so if for whatever reason you're short somewhere here, I don't know why you would be, but if you are, I would be careful. Just a cautionary sign. So again, the mid 60s was just a target if we're long low 50s. I'm not actually going to go short there. My shorts are going to be in the mid 70s and above. So So for now, I'm just watching. If we can get a 15-point move up into mid 70s, then I'll look for shorts. But with the advanced decline pushing and the ES not even above its high, I mean, I do expect this to take out mid 60s at some point. So what happened here under 53 was when you got the news, it probably stopped out a lot of guys who were long the overnight and pre-market, probably stopped them out. So now it's probably a bit more light on the sell side, which will allow it to move up easier top of the strong advanced decline. And now it's holding above zero. Seeing this, if you come back down to the low 50s again, which I would not expect, I would go long. Just based off seeing all this. It's strong now. And delta is nice and positive. So this blue bar is a bid. I don't really care if it's anything like below 500. I only care for bids once I'm in the trade for continuation, or once I'm looking if I'm looking to get long or short. I'm looking for this to happen at support if I'm looking for longs, and the pinks to happen at resistance if I'm looking for shorts. So this is an example of what I would like to see if I'm looking for longs in support. This is how it looks like. So this push comes as no surprise. We held on that news, and the advanced decline was above its high of day, while ES was in the center of its range, so it was a bit of a surprise. So now with the advanced decline being this high, if for whatever reason we do come back down to the mid 50s, I'll go along with the stop below 52, 53. I'm not sure if that's going to come though, but it just makes it very clear and a good trade if we do come back down once again off this zone. And again, the mid 60s is not a zone that I'm looking to short. So it's simply a target if long low 50s. So now advanced decline is positive and ES is negative. So it would not surprise me to see ES hit the high 60s, like 67, 68 now, with advanced decline being plus 120. Also, the tick is holding above zero, and nice deep breath is now in positive territory. The running stops now on the short side. It's a bad structure. Mid 70s, I'm looking for short. So I'm looking for mid 70s with offers stacking. I want to see offers, I want to see the sell imbalances, I want to see the buying stall, and then go short for a move back down to high 60s. I have to see the shorts get squeezed out first, a bit more than this, above 70. And these ones and fours, a lot of times these do get filled either soon or sometime later in the session. So just watch out for this. If you're shorting mid 70s, your target would be the bad structure in the mid 60s. These do get filled a lot of the time, so yeah. Yes, it's green now. We're +3 now on the day on the S&P. I'm looking for mid 70s. The tick holding above 0 though is not what I want to see. So once I enter, I need to see tick get back and go below 0. If I enter short and tick is holding above 0 still in pullbacks, then I'll have to exit the market at break even. And the breadth is not too, it's positive, but it's not that positive, so that's also pretty good. We also have people who are stuck here within this zone who can get out on the pop, and that's going to be what I'm looking for. The people who got stuck long this zone, we thought it was going to bounce and continue, but we broke down pre-market, so the first pop back up into their average prices should be good for about a pullback. But I'm looking for the high mid 60s on this one. Points off the close. So I'm looking at the Globex POC and yesterday's POC. If you look over here, Globex is 20 wide and the POC from yesterday is 9 wide, so it's a pretty heavy area that we had a hard time breaking away from. So the first move back into it, you can expect some guys who are stuck who have to get out of the market. So the 74 to 77 should act as resistance on the first test back up into it for a pullback. So that's what I'm looking for. I'm looking for the market to get up into this zone, offers stacking up, and I'll go short. Hope that makes sense. Okay, let's go. If we pull back though to 67 or 68, and before moving up into mid 70s, I may have to cancel the trade just because they're already exiting a bit ahead of it. So now if it does come back up into it again the second time, there's less people who are left to sell because you pull back ahead of it. So if we do, if we pull a few more points, I'm gonna have to cancel that idea, unfortunately. If we snap below 68, I have to cancel the idea. Okay, I'm watching the market, looking for offers to come to the market. Ideally 74 to 74.5 is where I'm looking at. The pulls down and holds. I may have missed it. So since we're holding a bit below it, I was looking to take it the first time into 74s without offers, but now that we're holding a bit below, I'm looking for offers now for confirmation. If there's no offers, I can't take it. I have to see that there are big boys here that want to sell it. If not, then I don't want to be involved. Like I have to see this blue down here has to be pink up here. If there's no pink bars over here, I can't take it. So if on this pullback the tick is holding above 0 still, and we do come back up again, it just lowers the odds that it holds this level for a second time. And FSC Klein is also plus 600 now. ES is only plus 5, so pretty strong market. and I missed it again by 2 ticks. I had a resting order of 74, and I was going to add if there were offers, missed that. So as you can see, we sold off right ahead of the overnight POC and yesterday's POC. That was no surprise. So at this point in time, since we pulled back ahead of it and I didn't get filled to 74, I'm looking for whoever is short now to get taken out above 78 and push them into the low 80s. I might scalp a short off that, and if for whatever reason it starts to hold, I'll exit, break even, and re-enter high 80s, low 90s, short side for a move back down to low 80s. At this point in time, with the advanced decline being so strong, if we pull back down to the mid 60s, right here, and AD is still strong and tick is still positive, I'll get long with a move back up into mid 70s, understanding that the market context right now is it's bullish, given that we had the news and we held on the bad news and you know, quote unquote bad, right? And the advanced decline is very strong in positive territory, tick's holding above 0. And with breadth being positive, if we come back down to mid 60s, I'll look to get long. So as now, my bias is on the long side if we come back on dips, and on short side I'd be cautious unless we get like these quick spikes that are stopping out shorts. That's your edge. If you're just entering randomly against a strong market, that's not very smart. Unless it's the first test back up into a zone, that's okay. But if we're holding, you don't want to be stuck in a bad position, you know. Yeah, it's where the volume gets thin. It's pretty much, if you look over here, second, above 77, it gets thin in Globex and it gets thin in the RTH session. It's value area high in the RTH session. So if you do get above 77, it gets thin and it could easily move back up into mid 80s. So. And for anybody who was confused on why the mid 60s was not a short for me, I can go into depth on that and why it was only a target and not a short zone. So Dave, I'm not sure if you were in the stream or not, but if you were, I won't go into it, but if you weren't, I can explain to you what I was looking at in real time. It's up to you. So, with advanced coming positive, if we come back down to the mid 60s, if we get into if we get flat on the day, AD is positive and tick is not too negative, I'll look for a long back into mid 70s. I want to see these ones get filled though. This is bad structure. If advanced decline is holding above plus 200 or so, and we're in mid 60s, I'll be looking for longs. And since it's not an extreme, it's not outside of value, it's in the center of value, I have to see a bid for confirmation. If there's no blue in mid 60s, I can't take it. Simple as that. And delta also has to hold as well. And if it comes, the stop would be below half, back under 63. A few ticks below the 50% retracement if we get mid 60s. So we can risk about 2 points or so for a 10+ point target. So 5 to 1 reward to risk. So it's good. it's good. Even if you lose half the time on this, the net expectancy long term is still positive because the bias right now is bullish. The advanced decline is very positive, considering that we're only +3 on the day. So it would not surprise me. It's a realistic target if we move back into the mid 70s. So again, if you come back down to mid 60s, you want to see blue, the delta holding, not below. If it goes below 4,000, then forget it, because then you have over 4,000 contracts now sold on the bid, over 4,000 contracts sold on the bid and bought on the offer. So that's aggressive on sell side. And you want to see the blue bids holding mid 60s, the delta holding, tick not below the low of day, and advanced decline holding above +200 when ES is flat. It would be a good trade probably. It should be good for at least a few points. Back up into high 60s at least for a +2R on the first scale out, and then +5R on the last target. Let's see if it comes. So now on the flip side, if we come back down to mid 60s and we're not bouncing, then you have a scenario where you have over 10,000 contracts from the lows bought on the offer. So they have over 10,000 people, or over 10,000 contracts long. And if we can't bounce into this zone, if we start to hold lower, then they have to liquidate. So that could cause a liquidation move back down to 50s if that happens. So you want to see into mid 60s, you want to see the blue bid supporting it and the tick not too negative, advanced decline positive, and that's the confirmation that the market is still strong. Stop 1 point below half back under 63. Because if they can't hold half back, then what can they hold until the low 50s? Okay, so here we come. See, what you want to see is the blue to pop up over here, the delta to hold, advanced 80 to hold above 200, and tick to not go under low of day, and then we're looking for longs mid 60s with a stop below 63.
Lights are lit and they're sweet on your embrace. One everything I dare. Lights are out and there's time to your embrace. There's another dare. Lights are lit and they're sweet on your embrace. One everything.
Our delta is near the highs.
Lights are out and there's time to your embrace.
Oh man, may not come. So this week has been all about accepting that you will miss trades and just looking forward to the next one. I've missed a lot of trades this week by a few ticks and like 1 or 2 points that would have yielded 8, 10, 15 points almost per trade. So you just have to accept that. Can't do much about it. Just, all I can do is accept and that's it. So above 78, at this point the market is very strong. I would not look to short the 80 zone. I would use it as a target if you are long. I'm looking for shorts in the high 80s, low 90s. And a quick push up into it above 82. So if you go 77, 78, stall, and push through, push over it 82 and squeeze 87, 88. I'll get short for move back down to the low 80s and high 70s. And also, now you have everybody on the same side, all long, so it's going to need a correction eventually in the delta. So I think the high 80s is a good location to get short for anticipation of that correction. Market seems pretty thin. Just bounced up like 1.5 points or nothing. Squeezing shorts. These zeros will the high odds it gets filled. If you get back up to L high, C low, I'll get short 81, 82 for a quick move back down to the mid 70s to refill these this bad structure. Has to happen really fast though, like in the next 15 seconds. I'm giving it 10 more seconds and then canceling the order. Doesn't come.
Devil in a red dress, call 911, I'm a killer. You know I hate to come.
I'm at 81 for a starter. I got filled. I'm short 81.
Devil in a red dress, call 911, I'm a killer. You know I hate to confess.
This is going to be a quick trade, guys. I'm covering half at 78. Stop at this point, break even 81. So my stop is one tick above 81. I break even pretty much, and I'm looking for +3 on the first scale out. Back into the zeros. I took +2.5 on half, just in case. I'll cover half what I have left at 77, leave 1/4 freight runner, just in case we pull back down to low 70s. And stop is break even, one tick above.
Call 911, I'm a killer. You know I hate to confess. Bang, bang, got my hand on the trigger. Devil in a red dress.
On the pullback, the tick is holding above 0, so if you are conservative, you could take this off for +3. I've already locked in. I've locked in half or +2.5, so I'm just going to hold it for a 77 and low 70s with a break-even stop. So I'm okay with it. I don't mind that tick is holding above 0. I'm okay with the reward to risk in case it doesn't work out. I'm okay with that. Doesn't matter to me. But if you are conservative and you're seeing that tick hold above 0, you do want to be out of short, or at least lock in some. So if we fail to hold above the overnight high, we can expect a flush back down into the POC at mid 70s. If we hold above the overnight high with positive tick, like we are now, like I said, you do want to be conservative and lock in at least half. I took off half for +2.5, so I'm okay with it. And if you guys want to know what the reason for the short was, it was the end of day spike high, and it coincided with the C low where the breakdown started from yesterday. So it was a nice entry. So your stop, you want the stop to be at break even because the market is strong. It held above 0. Advanced decline is near the highs, so your stop wants to be, it should be at break even, because if you overhold this, if you're going to overstay, you're going to go against the overall market trend, and that's not going to be a good position, because then you'll have some stress, and you'll have a lot of downside versus limited upside. And this is how you trade stress-free. This is what I do. I trade stress-free. Just wait for the market to get the best prices once everyone's stopped out, and then I just sit. That's what I do. That's how we do it. Okay, I got hit for break even, -1 tick. I'm +2.25 on this one. Now look for the next trade. Looking for for high 80s, low 90s. A squeeze above 82 above the L high. Should push out some more shorts. If we go above 82 and fail to continue and come back into it, that's also a short setup for a move back down into the overnight high. And if we fail to hold above the overnight high as well, your target is going to be the overnight POC, and that's going to be a good trade as well. So above the L high, if we fail, we come back to go above and come back through. That should be a good short for a move back down to the overnight low, overnight high. And guys, I don't care if if I'm getting stopped out for -1 tick when I've already locked in plus 2.5. If the odds are not like, I don't care if I get stopped out at the high. It doesn't matter to me. Like, I'm just taking the trades that make sense. I'm trying to manage my risk properly. I'm not going to overstay hoping that it goes lower. If I get stopped out at the highs, I don't care, so be it. It doesn't matter to me. Because obviously in hindsight, right, everything looks so perfect and makes so much sense. Like, oh, why'd you do this? Why'd you do that? If you're backseat trading and all these trolls, you got a high of day stop, ha ha ha. Like, yeah, but I also shorted at the highs where whereas you were short way down here, okay, buddy? Like, so that's why I ignore the trolls and I just do what I do. There's a lot of trolls in FinTwit that like to troll about your stops, but you have to manage risk. You have to accept